Okay, recording this video after close of trade Tuesday, 7th of January 2014. Hope you had a good day's trading today. So, at the end of each day I check the news feeds, just see what's going on, read the kind of the aftermarket kind of commentary, see what people kind of are saying, and to be honest, I'm flabbergasted that today's commentary is also, bullish. It's like, the Dow closed up over 100 points and wow, it's so, the markets continue to go up. I saw nothing but weakness today, and today's low is an absolute critical number. We break below that, we're going down, bombs away. So look out for that. Today's low was 26 and a quarter. It was like a slow grind up day to day, a little bit of volatility after hours. I wasn't watching it the last couple of hours of the day, but there was some good kind of setups kind of coming along. It was only 1.0 million contracts traded. Again, it's kind of weather affected, people not at their desks in New York, Chicago and so on. But let me show you what I'm kind of seeing on my charts. The first thing that I thought was interesting with the bonds are starting to strengthen a little bit at the moment. They're kind of oversold, got amateur down bars on the bonds, and the bonds are starting to move up. Now, psychologically, with the new year, come January 1, things change. It's like the psychology of the market can totally change. Coming up the last 3 months leading into the end of the year, it was just bull, bull, bull. It's like nothing, there was no point going short at any point in time. It was all just, heading up to kind of record highs. But as soon as January 1 comes along, it's like the psychology of the market can easily change. And what I see is going on is there's a flip coming out of stocks and into bonds kind of going forward. We're seeing the bonds starting to strengthen a little bit and the equities starting to tire. They've had a damn good run up here, and what I'm seeing is this on this bond versus stock market oscillator, it's starting to really weaken up here. So you can get this, it's free on the website. So this just looks at the SPY for the equities market versus the TLT. These are ETFs that cover the equities versus the long-term bonds. And when you look at this in terms of an oscillator, you can see periods where we got overbought in terms of equities versus the bonds, and now we're coming down, we're about to cross the zero line on this oscillator. That means that all of a sudden we'll have more strength in the bonds and the equities will really start to kind of come down. So there's a flip happening in my mind in terms of the bonds and the equities. So people have a damn good run in the equities and they're taking profits and they're moving the money into bonds. I'm not saying this is going to be a strong move back up in the bond market. It's just kind of, it's oversold versus overbought, and there's just going to be a little bit of kind of money moving between the two. But I see today's low is absolutely critical, and I think if we break that tomorrow, we're going to have a strong kind of sell-off day in the next few days. So that's going to be interesting. So that's the first thing to note. The second one is, now I talk about this with different time frames, and this is a pattern that you'll see repeated again and again and again. Market breaks up into a trend move, kind of goes to that trend move, and then what you see is left shoulders being made by end of trends on the lowest time frame, then a pullback to end of trend in the medium time frame showing where the head move is, and that's the top of the market. And after that is made, you get the market kind of selling off. You maybe get a left shoulder made on the daily chart, but it starts to sell off. Now I'm going to show you this on this is the 45-minute chart all the way up to the daily chart. We also had it during the day today, going up from the 500 tip bar chart up to the 4500 tip bar chart. Any time frame, any markets you kind of choose, you'll see that kind of pattern rolling through. So the left shoulder was made. This was Christmas, pullback to end of trend on the 45-minute chart. They then had a sell-off, and yesterday's activity was caught by a pullback support in a 135-minute chart. This is the support level where we're playing out pullback to end of trend here. I'm not sure how strong this is going to be tomorrow, whether we're just going to fade and kind of drop through that pullback level, but that's what we're doing. The left shoulder is made here by the lowest time frame. The middle time frame is making pullback to head. The head sometimes goes above the left shoulder, doesn't have to be, but it's a cyclical end of trend pattern on this time frame, and that's all happening within the context of having a cyclical resistance that happens to be end of trend on the daily chart here. So very weak. We've had our trend, it's exhausted. Pull back to end of trend, pull back to end of trend we're going to make, and this is under this resistance level, so it will start to kind of come off. Now let me see if I can show you that on the lower time frame charts. So first of all, on the 500 tip bar chart, I've kind of cleaned this up, taken pro-am off and so on. Today's activity, we broke into this uptrend. There's the left shoulder being made on the 500 tip bar chart. This shows an exhaustion level at this point here where the market kind of just reaches an end of trend. It actually went to make an exhaustion pattern a couple of points higher than that, but that's the left shoulder being signaled on the lowest time frame. We then go up to the next time frame, which is the 1500 tip bar chart. On this chart, remember the end of trend on 500 was made here. This one we're making pullback to dirty end of trend here because we overshot the pullback level. This doesn't print as a neat end of trend. That's a dirty end of trend signal there. And then we go to the 4500 tip bar chart. Same thing, pullback to dirty end of trend. That level printed probably a little bit earlier. It would have been nice to be either here or kind of here, but anyway, it has printed pullback level because we violated that support level. This is not printed as an end signal, but that is what I call a dirty end of trend. And look at the sequence that's going on here. This was this slow melt up during the beginning of the day. We had this blue professional bars profit taking here, finally with a spike exhaustion pattern, pro signal exit there, bang with Rambo patterns, amateurs, buying the breakout, expecting new highs. No, as soon as it breaks a fraction above that, all the professionals come in again, take profits, bang. That's the exhaustion pattern here. We then put in a first bearish divergence signal showing weaker buying going on here, and then finally flush patterns, flushing out the last of those buyers there, and then this is like a U-turn. This is the professionals kind of getting on board this, kind of selling it down at the end of the day. So that same pattern that you see, pullback to end of trend, pullback to end of trend, cyclical high up here. On this time frame, you can see exactly the same thing kind of going on with the lower time frames. Pullback to dirty end of trend, pullback to end of trend, and pullback to dirty end of trend. So hopefully, I've talked about this before. I'll try and find the video to reference that, but you see these end of trend patterns cycling through the different time frames, and what it's showing you is a left shoulder, a head, and this is a right shoulder going off here. Bang. Classical technical analysis will say, well, the left shoulder has to be below the head, and the right shoulder has to be below the head, and the break at the neckline, blah blah blah. It's not as clean cut as that. It's like we've got a triple top going on here: left shoulder, head, right shoulder, with exhaustion, bearish divergence, flushing out the buyers. Bang, we're rolling over. So today's low, this kind of 28 type level down here, absolutely critical going forward. So all this bullish commentary that we've had today, don't get sucked in. I don't think that's for real. The 40,500 tip bar chart, which is kind of closest to the 45-minute chart here, same thing. So this was the Bernanke kind of speech that kind of led to that Christmas rally going off here, and now we finally got our pullback to dirty end of trend again, because the pullback level got violated kind of down here yesterday with blue professional bars coming in at the lows. That's a dirty end of trend. It doesn't plot the end signal there, but that's exactly what it is. Call that a dirty end of trend. We've had our exhaustion patterns on the left shoulders. We've had bearish divergence kind of coming over here, and look how weak the buying is kind of coming into this, testing into that end of trend signal there. So really important day today in terms of trading kind of going forward. Let me just show you the 1500 tip bar chart. So I was long at 29.25 because this thing was just hanging around above resistance. It looked like it was going to make a break, and although we'd had exhaustion patterns yesterday at the end of today, well, we needed exhaustion patterns during the full liquidity of the day to kind of end this thing, and that's what we got here with this left shoulder going on. So I was long 28.25, got out with 3 points just because it was kind of slow, and I think I'll get out just at this all these blue professional bars kind of coming in here with the Rambo pattern. Kept on going. It made the original target, but I was happy to be out. Wasn't kind of waiting around for an extra point just because it was so slow. Made a half point on a long trade and then lost a half point on a short trade. I was long here and then getting short into this move just before that Rambo pattern came in, and I was just way too early. This was really slow, and then as soon as it did that, bang, it just cracked to the downside, and I missed that. I was actually taking a shower at the time because we were going out. So bang, kind of missed this nice little sell-off. Would have been great for 4 points because I was short at 32.25, but as soon as it went up a little bit above that, I thought, just too slow, not much going on here. But this is a pullback to dirty end of trend. Exhaustion patterns on a left shoulder, then we come to make first bearish divergence, bang, pullback to dirty end of trend, testing back up with a Rambo pattern, perfect little setup for a short trade, and came in there. Whole bunch of blue professional bars, hold it at 28, then push it back to that level, and more blue professional bars kind of coming at the highs, more exhaustion, bearish divergence, and now we're kind of cracking on down. So my expectation is that we're going to have a weak day tomorrow, but let's wait and see. Let's play the signals kind of going forward. We've got a switch happening from equities into bonds. People are taking profits, and that for me was an extremely weak bar. So look for the low of the last couple of days, the low today, this kind of 26 level, low of the day before at 17. So in that range, 20 to 25 type area, if we start kind of cracking through there, we could have a big kind of sell-off type day kind of in the next couple of days. So that's what I'm looking at my charts. Hope you traded well today.